We detected an unusual trade worth $142 million on MicroStrategy stock, ticker symbol MSTR. This is a massive bet, and when it comes to MicroStrategy, one name always comes to mind: Michael Saylor, the company's founder and former CEO. Could he be behind this move? Or is this another wealthy investor stepping in? Either way, it's not about who it is, it's about what the data shows. That's why we follow the data and track smart money to gain a real edge in the markets. And so in this video, we'll break down this unusual options activity to find out whether this wealthy investor is going bullish and buying, expecting the stock to move higher, or bearish and selling, expecting it to drop lower. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, giving them an edge to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into the unusual options activity to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, the most unusual trades happened on July 1st at 10:51 at the 41-second mark for these July 18 options at the 380 strike calls and the September 19 options at the 390 strike calls. A quantity of 34,440 contracts were being traded. Now, we need to be very careful with these July 18 options at the 380 strike calls, because when we dive deeper into the option chain and take a look at the July 18 options, we can see something interesting. At the 380 strike calls, there is only 9,000 open contracts at the open interest, much less than the 34,000 contracts that were traded. So why didn't the number of open contracts increase? Well, because this wealthy investor was not opening new contracts. Instead, they were closing their existing position here and rolling it out to a later expiration date to the September 19 options. And they also rolled it up to a higher strike price to the 390 strike calls, where we now see 50,000 contracts opened, which is greater than the 34,000 contracts being traded. That tells us this wealthy investor opened new positions here since their contracts were added to the existing open interest. And that is why we also entered the same position here, marked as POS, which stands for our position, and the green color indicates a buy position. And so, if we go back to the options time and sales tape, this wealthy investor was closing out of these 380 strike calls that expired July 18 and rolled into a new trade to a later expiration date and a higher strike price. This means that these September 19 options at the 390 strike calls are the new open trades. And so we can calculate the cost of this new trade by multiplying the total number of contracts by the price per contract, which is 41.35. Keep in mind that options are priced per share, and each options contract controls 100 shares of stock. So we multiply by 100, or simply move the decimal 2 places to the right. That means each contract costs $4,135. And so when we multiply this by the total contracts, 34,440 contracts, we get a total trade value of approximately $142 million for this new trade. But keep in mind, just because a trade is large does not necessarily mean it has a high probability of success. In fact, this one carries more risk than the smaller, more selective trades we share on our website. And so if you want to get access to the lower risk trades with a higher probability of profit, then go to our website. We'll put a link up here. Keep in mind that our members also get earlier access to trades like this before anyone else, even before we share it with the public. So if you're tired of being late and want more time to act on these opportunities, just head over to our website, where you can see in real time when and which stocks wealthy investors are trading on Wall Street so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that said, even though this trade carries higher risk, we still took it, but we used position sizing to manage our risk. And so, based on our deep research across multiple variables and data sets, this wealthy investor bought these September 19 options at the 390 strike calls for $41.35 each, the same price as we calculated and saw earlier on the options time and sales tape. And so, when we analyze this trade, you can see here on the risk profile graph where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line over here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below this zero break-even line as the share price goes down, this trade becomes more negative loss. And as the share price goes up, this trade becomes more positive, more profitable, because it's going long bullish on MicroStrategy stock. We can also confirm that by checking the options Greeks. This trade has a positive delta, which means it's positioned long and bullish. If it was a short bearish trade, we would see a negative delta instead. But keep in mind the risk with this trade. It has a negative theta, which means it loses value over time due to time decay. And that is why you can see here, the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break even on this trade moves higher as time goes on. And so you can see here, even though the call options we bought have a strike price of $390, the stock needs to trade above $431 per share for this trade to be profitable at expiration. Because of this added risk, along with other factors, we only took a small position in this trade. We don't invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on lower risk, higher probability of profit trades, the kind of trades we share on our website. We'll put a link to our website here where you can also learn more strategies to increase your profits. Let us know in the comments. Do you think MicroStrategy stock will move higher or drop lower? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.